Houston, we have a pretty freaking serious problem. For those of you who missed it, or for those of you who unfortunately had to endure it, the stock market got curb stomped again today. In this video, I want to very quickly break down exactly why that happened, why I think things are going to get worse before they get better, and also a couple of my thoughts and opinions on how to take advantage of this opportunity, because that's exactly what this is. I deeply believe this is a money-making opportunity. I just want to share my thoughts on it, and hopefully it helps at least one of you watching. Very quickly, I wanted to take a moment to address some of the comments that I've been seeing, and the answer is yes. The things that I discuss here with all of you, talk about on the live stream, and also go over with all the Discord members, I bet on those with my own money. For example, on this screen now is the daily DGen report. Basically, I just write up a quick report of everything I did that day, my trades, my entries, my exits, if it went good, if it went bad. I'm sure if you've seen it for any amount of time, yes, you see big winning days, but you also see big losing days. That's the life of a trader. Anyway, here is today, Wednesday, August 7th. I talk about how I did. Personally, I had a very good day, made over $11,000. You can see the Piper signal here, the time it fired. This is a screenshot from the Discord. And then you can see my individual trades. I took 4 trades. Technically, one of them I was closing out from yesterday. That's trade number 2. But as you can see, I made 1,600. I made 2,160. I lost 8,800. And then on the final trade, I made 18.6 thousand. So that nets out to just under $12,000. Not only do I just want to show you that I put my money where my mouth is, I try to be as transparent as I can possibly be. In the Discord, all the members will attest. As soon as I get into a position, I post it. And the same thing with the exits. If you want to join that, get into locals, and to get into the Discord, you have to be a supporter, but you could do that for free if you use the code Goonie. If that at all interests you, it's in the description of the video. Please don't forget the major aspect of what I explained in yesterday's video. As an active trader, you can make money when the market goes up, when it goes down, or even when it goes sideways. So yes, is the market pretty bearish right now? Absolutely. But should that stop you from making money? Absolutely not. Speaking of the market, not a good day. Stocks close lower on Wednesday as market's comeback attempt fizzles out. That doesn't sound so dramatic, honestly. And even if you look at the heat map of the S&P 500, it more so looks like Christmas, little red, little green. This doesn't do a good job at explaining how bad today was. What does is the daily chart. As you can see, we had a very solid gap up, and I'll be getting exactly to why that happened. And you're gonna realize that then we just sold all day. And right now, as I'm filming this in real time, it's getting even worse. So what was the deal? Why did we have a gap up where on Tuesday, August 6th, we sold in a close, weak post-market, and then we ended up all the way up here? What happened? Why did we have the gap up? Why did we have the horrific sell-off? And why do I think it's gonna get worse before it gets better? Well, let's talk about the actual gap up first. BOJ sends dovish signal after rate hike spurred market meltdown. Well, that means we know things have been getting bad because of the whole Japanese yen carry trade. We saw that was getting bad. And then all of a sudden, 2 days later, the BOJ, the governor, and I'm going to be showing you everything he decided to do, he basically said, actually, we're not gonna be so hawkish. Actually, we've decided we're gonna be a little bit more dovish. It only took 2 days. The market liked that. They're like, okay, they're not gonna be so aggressive. So that's what this kind of momentary pop was. And I say momentary because it only lasted a couple hours. It happened at 3 in the morning. That's when the governor of the Bank of Japan announced that they weren't gonna be so incredibly hawkish. Instead, they're gonna lean a little bit more dovish. And the market accepted that for a little bit, and then quickly got crushed. Before we get into why it got crushed, and I think that's like really the crux of this video, let's talk about the overall state of the economy, because it's the overall state of the US economy and thus the global economy of why things aren't so good. It's why we got crushed today, and it's why I think there's more pain to come. I'm going to show you in a very important indicator that has me believing more pain is on the horizon. But first, according to Jamie Dimon, credit card losses have normalized, no indication of recession now, still sounds optimistic. Consumers still have value in their homes, stock prices are up, jobs are plentiful, and wages have been going up on the low end. I'll take $500 for things that I don't believe at all, Alex. This is BS. Honestly, do any of you listening to this right now believe what Jamie Dimon is trying to pitch us? It drove me in such an irate rage when he said this that I started to collect just all the recent things from the past week alone that suggest this is total BS. The US unemployment rate has risen for 4 consecutive months, the longest streak since the 2008 financial crisis. Over the last 75 years, every time unemployment rose for 4 consecutive months, the US economy entered recession. The jobless rate has surged from 3.8% in March to 4.3% in July. It's the highest level since October of 21. Meanwhile, the US hires rate declined to 3.4% in July. It's the lowest level since the 2020 Rona period and below the pre-Rona period at 3.8 on average. Somewhat related to this, and I don't want to go off on too far of a tangent, whenever there's a 3-month period that we are like above by about half a percentage point of the 12-month rolling average, I'm talking about the SAM rule, it always tends to lead to a recession. And once again, guess where we are? We're above that. So I don't want to get into the nuances of what this is or isn't, because now the creator of the SAM rule is rolling it back and saying, actually, I don't believe that anymore. The facts are the facts. That's just what it is. Every time this has happened in the past, it's led to a recession. And guess what we're seeing right now? So that's one piece of evidence. Questions with the labor market. But what about this? US manufacturing extends slump. That doesn't sound so good. Is there anything else? Stocks halt rally as weak bond sale jolts trading. At 1 p.m. Eastern today, we got the results of the 10-year bond auction. Basically, you get to see Wall Street's appetite for buying bonds from the government. And really, that's tantamount to saying, how much do they believe in what's going on? Of like, okay, like, is it safety? Is it risk on? If it's risk off? Guess what? Didn't go well. In fact, relative to the previous 10-year bond auctions, came in considerably lower, showing that Wall Street knows something is up. So just very quickly to recap, Jamie Dimon saying everything is great. Don't look under the hood. This car's totally not a lemon, and you should trust me, brother, because things are fine. But in reality, we have unemployment going up, we have labor market issues, we have manufacturing slowing down, we have consumer confidence dropping, we have a spike in credit card debt, we have a spike in delinquencies, both for small businesses, individuals, and also on auto. And I'm sure there's a gazillion other things that you're personally experiencing and noticing in your own life that are probably telling you some of your spidey senses that maybe Jamie Dimon's absolutely full of it. And the answer to that is, it's because he is. This is all just some form of a show to placate whoever's listening to him, because remember, he's running the world's largest bank, JP Morgan. He doesn't want people to panic, because obviously if he told the truth, it would probably cause people to panic. It wouldn't look good for the current administration, and it would lead to a whole host of other issues and would probably make the very bad situation even worse. I guess morally, like, should he lie, should he not lie? I would say maybe just tell the truth, but don't be so extreme. I just know what he's actually saying. There's no way he believes it. So with all of that in the backdrop, this is the core issue. And I know I'm going on a little bit of a tangent, but I'm about to tie it all together. I appreciate you letting me kind of go on this rant, but I promise you I will tie it together. The market was good, pretty much all the way up until the end of July. People were little bit talking about a weakening economy, but whatever, the stock market basically at an all-time high, so we're good, who really cares? And then all of a sudden, July 31st, when the Bank of Japan had a surprise interest rate hike to increase the yield of the yen, because remember, even though we're battling inflation, Japan is battling deflation. So a lot of the steps that the US government has been taking, and by government, I really mean the Fed, they do the opposite because we just have different problems. Well, a secondary effect of that, when you're attempting to basically clean up your own house, it's hurting this thing called the carry trade, which no one at all seems to know how much money is in it, except we know apparently it's a crap load. It can really cause issues in the equity market. Well, that brings us to this: buying protection against a big sell-off. Someone knows something's going down, whether it's because of the weakening US economy, whether it's because of this yen carry trade, whether it's because of aliens about to invade. I don't know what it is, brother, but someone out there is really taking extreme steps to protect themselves. Investors have been buying protection against a large sell-off as if there is a major crash. The nation's Taildex index, measuring the market's expectation of an extreme event, spiked to its highest level since the 2020 Rona Monday. The index also estimates the cost of protection in the options market against the S&P 500 drop of at least 30%. At the same time, one of the biggest black swan funds available on the US retail investors, TAIL is the ticker, jumped 4.5%, the most since March of 2020. Now, I have no crystal ball. I wasn't talking to the market gods today. I don't know if there's gonna be a black swan event, but people out there are taking extreme steps to buy protection. So that's more of the medium term. I should be clear that in the long term, it pays to be a perma bull. If you ask me where the market's going to be in 10, 20, 30 years, I think much higher. But we're talking about in the short to medium term. That's the purpose of this video. And in the short to medium term, I think there's going to be more pain. The BOJ sends dovish signal after rate hike spurred a market meltdown. That's exactly what happened at 3 in the morning that caused the market to go to the upside, because all of a sudden the market's like, oh, okay, even though the Bank of Japan was actually being pretty hawkish and they were really closing the gap of the yen carry trade, it sounds like they're taking their foot off the throat of their economy, our economy, everything's good. Obviously, this was short-lived, and that makes sense. It makes sense because all of a sudden, if you make a decision the 31st and then 2 days later have to be like, no, never mind, we didn't mean to do that. That shows you how truly bad things are. To make a big central bank decision and have to reverse course in 2 days, do you know what kind of data they must be looking at that they're like, like, that clearly cannot be good. And just to drive the point home, Supermicro announces a 10-for-1 stock split. Shares plunged 13% on earnings miss. And guess what? Their gross margin dropped. Airbnb shares dropped 14% on earnings miss as company warns of slowing US demand. Disney falls on concerns about its theme park business. And obviously CNBC, they're gonna shill them. Here's why we'd buy the stock. Well, here's a quick answer. Don't, because everything's getting absurdly weak. Maybe there's a time and a place to do something like that in the future, but you're seeing the theme here, right? Like, I'm not the one with the tinfoil hat going crazy mode. This is all blatantly in our face. I feel like I'm absolutely losing my mind. But anyway, to tie this back, here's the major things from the BOJ. Won't raise rates when market is unstable, must maintain current degree of easing for the time being. Market moves are extremely volatile, watching impact. See no big change to Japan or US economic fundamentals. Market reaction to single piece of data appears too big. Policy path will obviously change if market volatility view on risks change. So really what they're saying is, oh, so sorry, we're taking a step back. But they're also saying by the end of this year, we're still probably going to end up going up. So if they still increase the yield of the yen, if they're jacking theirs up, we know we're getting rate hikes here. So the yen carry trade, the gap's getting closer. And if people are doing it on leverage, and that's all the rumors, that's no bueno. And we haven't spoken about this, but it's assumed that when they convert it over to USD, they're going into US treasuries. But now the rumors are they're actually putting it in the equity market. They're actually putting it in the hype AI tech bubble. And as that stuff goes down, this could get really, really froggy. One other thing that I want to point out, and I guess before I do that, yes, obviously, if you want to check this out, make sure you look at the USD JPY pairing. If this is going down, not so good. If it bounces up, like the little bounce we got right now, okay, maybe we get a bit of a recovery, but the further this goes, that will be bearish for the equities market. Also, I hope you're watching this in time because the Nike 225, the equivalent of the US's S&P 500, this is Japan's stock market, watch it overnight, because if this thing starts to tank, if it has another bloody red day, brother, you better buckle up. The final thing that I want to leave you with, and I do appreciate you getting to this point in the video, and I see no one talking about this. This is what happened the last 3 times when the spread between the 2-year yield and the 30-year yield started to decline after remaining at a high level for a serious duration. Once again, this is in the world of fixed income. I know it's a bit boring, but it's an important historical fact that all of a sudden, when we just drop, not so good. Huge decline. This is the tech bubble. Huge decline. This is the 08 crisis. This is the Rona period. But you see what's going on. And right here, most recently, we've been elevated for a while. The question is this about to turn? And if it does turn, is it going to have some weird interplay with this whole yen carry Japan issue and also the weakening US economy? We're seeing a coalesce of potentially negative events that all add up to a truly bad black swan event. I don't want you guys down in the comments, negative Nancy, what's all this doomsday? I just want it, if it does happen, for you to be like, oh, okay, like someone was talking about it. Obviously, there's no way to know what's gonna happen tomorrow, the next day, the next week, the next month. I just want you to have enough information to make a reasonable, informed decision. As I showed you with the daily DGen report, you can make money to the upside, to the downside, sideways. That's what we talk about in the Discord. Remember, trading and investing are two different things. As an investor, I love this because I'm going to be able to buy my favorite stocks on the cheap. You don't want to buy where everything's ripping. You want to buy your favorite stuff when it's cheap. And then as an active trader, you just ride the trend. If it's trending up, you can make money. If it's trending down, you can actually make more money because of the way volatility expands. So I don't want anyone to be scared here. I just want you to be better informed because no matter how you slice it up, this is a money-making opportunity. And if you want to talk more about it, yes, let me know in a comment below. I would love to get your thoughts. Am I right on everything? God, no. And that's exactly why I would love to hear from you. And don't forget, if you want to chat about it in more detail, you can join the Discord for free. Just don't forget to use that code GOONIE, Goonie. That's what I have for you. I appreciate your time. I'll catch you in the next video. Peace.